Hi everybody, Bob Iaccino from the Pure Exposure Growth Series, only a couple days before our live online trading event. So check it out in the link if you haven't. A couple of days ago, I made a video talking about the phase one trade deal. I've actually had people text me and email me saying that I'm pro the president, I'm anti the president. I want to put out there again that I don't make political videos. I only described what I thought the market would think about that particular deal and that I thought stocks would rise off of it. I said check Sunday night. We checked Sunday night. We made another video. Having said all that, I'm talking to you on a day where the Dow closed back above 27,000 and we're only a few hundred points away from the all-time high in the Dow, about 24 points away from the all-time high in the S&P. NASDAQ's still a little bit away, as is the Russell. A couple of important things happened today. The entire yield curve came out of inversion, could go back in. So some people are saying, well, now that means no recession. That is not necessarily the case, although I am on record as saying I don't think we're going into recession. But the inverted yield curve, it always goes back to its regular slope prior to the recession actually hitting. So just coming out of it isn't enough. The Fed is adding liquidity with the short-term purchases they're making that they're saying is not quantitative easing. It is and it isn't. We'll talk about that in the event on Friday. And then what do we like going forward? Well, there's a bunch of things we like. We like Walmart, we like Disney, we like Apple, we like crude oil. To the downside, a short play on crude oil. There's a lot of things that we actually like going forward. We'll talk about a lot of those on Friday. But one thing I mentioned again is that stocks would take this deal positively. Now, Brexit looks like there's a little bit of a breakthrough. I'm still waiting for the Boris Johnson press conference, talking to you before he actually addressed Parliament or the public. So I don't know what they're working on right now. But we saw the pound get to levels we haven't seen since May. So that was a big rally, over 1.25%. And one of the things I like about Brexit is that if there's a Brexit deal, now Mark Carney, the Bank of England governor, can actually act in concert with the rest of the global central banks to try and ease liquidity. Now, lastly, I want to point out that the probability of a Fed rate cut dropped from about 83%, according to the CME Fed Watch tool, down to about 74%. But more important than that, the probability of any more cuts past this one is almost at zero now. It's down in the single digits, low 10%, somewhere in that area. So a lot going on in the markets just before we enter the most profitable, I shouldn't use that word, the strongest period for equities is November through January, meaning they generally, typically, historically, that's one of their strongest point or percentage rallies for the equities, October being a volatile month. So check us out. I'll make another video for you guys in the next day or so, but thanks again for watching. Bob Iaccino, Pure Exposure Growth Series. I will speak to you guys soon. Again, this particular deal, not a political comment. The market took it like it's a good thing. There is a hiccup with the ag purchases. We'll talk about that again as it develops.